All right, we have come to the highlight of tonight's event. Okay, so tonight, we have invited a very experienced speaker to share with us this topic. She is a certified internal audit and certified chartered accountant. So she has 11 years in leading audit and advisory engagements to external clients of KPMG. She is familiar with financing reporting standards and experience in providing internal audit, risk management, and process improvement engagement to clients in various industries. Okay, so without wasting any time, let us put our hand to welcome our speaker for tonight, Miss Poon. Miss Poon, I'll pass the time to you.
Hey, thanks, Arthur. Good evening, everyone. Thank you for joining me tonight. I hope that you have enjoyed a good dinner with your loved one at home. So without further ado, let me start my sharing. So thank you for your introduction, Arthur. So my name is Yimin. I'm the COO of MCM International Consultancy PLT. So for the next 30 minutes or so, I'll be sharing with you the consultancy and advisory services that we can provide under MCM International Consultancy. But first and foremost, just another quick introduction of myself. I have 11 years of experience in a Big Four accounting firm, leading advisory and risk management role, plus 6 years of commercial, and I'm very familiar with all the manufacturing process and all the internal controls that a company needs to put in place, right? So before I start to touch on what is internal control assessment and also internal audit, I believe many of you may not heard about internal control, and you may not have an idea what internal control is all about. So the first part of this tonight's session, I'll be sharing with you what is internal control to let you have an understanding first before I move on to a more technical one, which is the internal control assessment and internal audit, right? So whenever someone tells you about internal control, what crosses your mind when someone mentioned to you about internal control? It could be fraud, related to fraud, segregation of duty, because of segregation of duty, so you have very good internal control, or audit. When it comes to internal control, means the policeman is coming, yeah, auditor is coming, right? Or reconciliation, everything needs to be reconciled, tally to each other. And finally, risk. Because I have risk, that's why I need internal control, right? So to a very large extent, internal control is about managing risk. And risk of a company can be categorized under 5 key categories. The first category will be on strategic. So when it comes to strategic risk, it's more like competitive risk. That means by nature, every company will have competitive risk. Yeah, because if you don't have competitor, that means you manipulate the entire industry, right? So unless you are a state-owned company or whatsoever, otherwise for sure you will have competitive risk. So having internal control can actually help you to manage those. Technological risk, this is a technology era. So definitely you have a lot of technological risk, whether your company is technology roadmap is up to date, it's ahead of your competitor, and whether do you have any industry risk or strategic transaction risk, which means maybe you are performing a merger and acquisition transaction, then definitely you will have some sort of strategic risk. The second risk will be on financial side. Financial side is how do you generate revenue, and in terms of cost control, do you have adequate cost control measures, and do you have fraud risk? Because recently there are a lot of scam, right, and a lot of bad news about all these listed company. Their financial statement is not accurate, so therefore the shareholders actually lost their money because of their trust and investing in the counter, right? So financial risk is actually a key risk to any company, not only listed company but also non-listed company. Now, of course, when we talk about risk, we cannot run away from compliance risk, because every country, every industry, they will have their own rules and regulation, including EHS, which is safety and health, right? So like for instance, now we are under pandemic COVID-19 situation, and we have a lot of health concern, safety concern. So internal control can also help to mitigate those risks. People say that prevention is always better than cure, right? Put in the prevention measure is always better than put in thinking of how to resolve them and try to mitigate those risks, right? Then the fourth category on risk is on reputational risk. This is how the public view and also the customer perception against a company. For example, if you have an industrial incident in a company, maybe the financial impact will be very minimal. Yeah, maybe you just have to send the injured person to hospital to get their treatment. But the reputational risk could be very high. Because nowadays, social media, Facebook, YouTube, all these are very common, even WhatsApp. Yeah, so a simple video that leak out the potential or the incident that happened at your company can actually jeopardize the reputation of the entire company. So it's actually a huge risk. Therefore, having internal control can also assist to mitigate those. Lastly is on operational risk. You have a lot of inefficiency or non-productive processes when you are running a company, right? So by having internal control, you can actually identify those risks and see how to put in proper internal control to mitigate them. And of course, you can also mitigate the wastages and drive down the cost, right? So I'll move on to the next slide. What internal control can do, right? So of course, number one, they can remove the risk entirely. By having good internal control, you can actually remove the risk entirely. Okay, for example, if you have a very important or a very valuable asset at your company, if you don't have any internal control to safeguard them, that means you don't have any CCTV, then the asset is not under lock and key. Anyone can actually go in and retrieve them and bring them out from your company. Then this is a very poor internal control, right? But if you put in place internal control, like only authorized people can go in and under lock and key, and anything that's go out from the company, you need proper approval and whatnot, you can actually remove the risk of this either theft of asset or the loss of asset, right? And internal control can also be designed to control the risk. There are certain risks that by nature are high or very likely to happen. Yeah, for example, the risk of, say, fire, right? Even though we may have the yearly inspection, or you may have already put in place certain control measures, but there's still a risk of fire in a company, right? So what we can do is that we will need to put in more measures to go and control the risk of fire, like having all these water sprinkler, or having all your fire extinguisher, or you set up non-smoking area. So that's how you control the risk. Then the last category is, if you think that you cannot accept the risk, then you can have another option, which is to transfer the risk, right? So put the same example, which is the risk of fire. If you think that you cannot manage the risk in-house, there's always a third party for you to outsource the risk or transfer the risk, which is the insurance company. You can always buy fire insurance, right? So in the event of any fire, you can always claim insurance. So internal control is also very important. Why? Because if you underinsured, then you will face the situation where you are unable to claim back all the value, right? But if you overinsured, this will actually add on to the burden of your costs. So internal control is actually very important in removing, controlling, and also accepting or transfer the risk. And of course, different control have different level of influence, and the strength of the control must be balanced with the need of the operating efficiency. So for example, if you think that your company have a risk of loss of, maybe you have certain petty cash in the company, but the petty cash amount maybe is only 5,000. So when you only have 5,000, you consider the cost and benefit impact. then you won't go and buy a safe box that costs maybe 10,000 to just go and keep 5,000 petty cash, right? So definitely you will consider the cost of benefit before you put in the control. Okay. Then there are 5 components of internal control. The control environment. Usually this is referring to the framework or the policies and procedures of the company. Yeah. And then second component will be information and communication. Third is assessing and managing risk. Like what I mentioned just now, you assess the risk of the company by looking at the impact of the risk and also the likelihood of the risk happening. Then that's where you put in on the control activity. You balance between the cost and benefit, then you put in the control activities. And lastly, a very important component of internal control will be on monitoring. Because once you put in the internal control, doesn't mean that that's the end. Yeah, so I can go and sleep tight and eat well. You need to monitor what if the internal control did not function as intended. So that's where internal control assessment come in. Because you already have internal control, but you need to do assessment to see whether it is adequate or is not sufficient, right? Now, there are many types of internal control as well, but let me just keep it simple and segregate it into 2 categories. One is automated control. When we say automated control, which means it is actually incorporated into your system or your logic. Like for example, the system will automatically search for a matching PO before paying an invoice. So this is actually a automated control. That means you don't involve any human interference, right? But of course, there are also a lot of manual controls, like you need to perform checking using the hard copy of the invoice, and then you go and match against the PO and match against the DO to make sure that the quantity is the same, the description is the same. Then after that, you sign and say that, okay, you have already reviewed and confirmed that this is okay to make payment. So there are many types of internal control, automated and non-automated, which is the manual control. Right? Okay, now, internal control assessment basically is helping the company to perform a gap analysis. Now, this is the current state of the company. Yeah, and then of course, as the management of the company, you have a desired state. That means you would like to achieve, like now you are actually, maybe your cost control activity is only at 10,000 per month, but you would like to increase that 10,000 to say 100,000 in a month. That's your desired state. But what is the gap in between that is stopping you to achieve that objective? So that's where internal control assessment comes in. So could it be because at the moment your purchasing function is not functioning well? Or is it because at the moment you do not have a purchasing policy that says that any purchases more than 10,000, you need 3 quotations to compare? And this purchasing function needs to have a proper segregation of duty and also conflict of interest check. That means the purchasing manager cannot buy from their direct or immediate family member. That kind of internal control. So by identifying where is the current state, and then we come up with all the gap analysis, and that's how we can help the company to achieve their desired state. So this is what we call as internal control assessment. So arising from the gap, there will be a lot of action plan needed in order for us to go to the desired state. And just to help you to remember, internal control CARES. So this CARES actually stands for C, compliance with laws and policy. When we do internal control assessment, we look for compliance with laws and policy. And then of course, we would like to accomplish the objective, right? And R stands for relevant and reliable data. When you are performing any sort of assessment, if the data is not relevant or is not reliable, then it is meaningless for us to perform this kind of assessment. And of course, the E will be efficient and economy use of resources, just like the example that I quote you just now. If you have 500 ringgit of petty cash, you don't go and install a 10,000 safe box, or even go and install CCTV just to go and monitor the drawer that consists of that 500 petty cash. You need to gauge between the cost and benefit. Last but not least, on the S is on safeguard of asset. So actually, internal control can achieve these 5 key components, CARES. Okay, now let's move on to how we can help when we come to internal control assessment. We can actually act as the management representative to identify the internal control weaknesses. Yeah, remember the gap analysis, and then we will come up with a lot of action plan or recommendation to enhance it before the company is being audited by external party. Usually, this exercise is a must for a company that is planning for IPO, that is going for listing. Or if a company is planning for a M&A exercise, that means merger or acquisition, it is also very important for you to go and assess the internal control. Because if you want to take over the company, you need to know whether the internal control of the company is doing okay. So all these financial data that the seller is presenting to you is reliable, right? So when we perform internal control assessment, actually we look into 10 areas. Of course, first is on the corporate governance side, which is the regulatory compliance. Then of course, we also look at the management, and then we look at the inventory management and distribution, and we look at the sales, logistic management, marketing, procurement, financial management, human resource, as well as information technology. So actually we focus on these top 10 area to assess where is their gap, come up with recommendation, and give them all the action plan that they can do in order for them to achieve their objective. All right, so I'll move on to the next topic, which is on internal audit. When it comes to internal audit, what would you say when people ask you whether your company needs internal auditor or not? Because many people presume that internal auditor means the policeman. Why would I hire a policeman in-house to make myself or make my life miserable, right? But actually, no. Every company, be it listed company or non-listed company, they actually need internal auditor. Why? Because the internal auditor can help to keep bad things from happening, and they can help to assure good things can happen. And of course, they will also be able to help the management to understand where are their risks. Remember the 5 category of risks, and then whether the risks are under control. Is it out of control right now? Can I accept the risk? Can I remove the risk, or can I transfer the risk? And whether those risks are worth taking. So actually, internal auditor is more than policeman. I can do much better stuff. And in Malaysia, do we need to have an internal audit function for every company? Actually, for Malaysia, it is not legally required for non-listed company. Only those companies listed on Bursa securities and few specific industry like government-owned organization, or GLC we call it, it is a must to have internal audit function. So this internal audit function can be in-house. That means they engage or they hire their own people to be the internal auditor, or they can outsource it to a firm of professional, like consulting firm like us. Okay, and every organization, regardless of the size, must have some type of internal control system and process, because every company will have risk. So if you tell me that, oh, I don't need internal control, and because my company is risk, we don't have any risk, right? So which is not true lah. Every company will have some form of risk. And many people they don't really understand the difference between internal auditor and also financial auditor. Auditor law, why so complicated? You have internal auditor and financial auditor. Actually, what is the difference between the two of them, right? And I can share with you, internal auditing is actually an objective assurance and consulting activity that is designed to add value and improve a organization operation. So if you take a look at the two tables over here, financial statement auditor, they are very specific. They are very focused. They only focus on the accuracy of the financial statement, right? And they also concerned about the company, whether there's any going concern issue of the company. That means can the company sustain or not? And basically for financial audit, they will review historical data. They will only audit past data for 1 year, for half year, and they will only focus on compliance with accounting and other regulations. And for people to conduct financial audit, primarily they need to be accounting background, obviously, and they are independent from the organization. So that means they cannot have in-house financial auditor which is not independent. Whereas on the other hand, internal auditor, they are very broad focused. They don't only focus on financial. They focus on the financial, whether they are accurate or not, but at the same time, they also look at the efficiency and the effectiveness of the operation, and whether internal control can put in place to accomplish objective or not, and whether these internal control are in compliance with laws, policies, and whether they are able to achieve the objective of safeguarding an asset, and many, many more. And for internal auditor, actually diverse skills are required because they are required to check every single area of the company. Can be accounting, can be operational, can be quality assurance, can be safety and health, can be engineering, BOM, whether it is adequate accuracy. So internal auditor actually come from different background, yeah, and it can be integral part of the organization, because if you do not understand the process of the company, then you may not be a good internal auditor. And of course, as an internal auditor, finding risk is not sufficient because they must make sure that control are in place, but in place is not sufficient. Yeah, does the control work or not? That is more important. If the current control doesn't work, cannot drive down the risk, so do we need to put in place more or additional control? If there's any unnecessary control, then should we eliminate them? Take for example, the risk of fire again. So risk of fire, we look at the impact of the fire and also the likelihood of fire, right? So if the control, say for example, we have a fire extinguisher. Fire extinguisher can actually help to reduce the impact or help to reduce the likelihood of the fire from happening. Take a guess. Actually, it can help to reduce the impact. So if let's say there's a fire, if you have fire extinguisher from maybe a significant burn down of your entire factory, could be just a small fire that you can put out in 15 minutes time, so it reduces the impact. But if you have a control, like for example, you have non-smoking areas, you have all these regular training or awareness session to your employee that they cannot smoke in the company, then you reduce the likelihood of the risk. But if you have a control and then you cannot relate this control, it can reduce impact or can reduce likelihood, then this control is considered unnecessary. It's just do for siok sendiri only because you need to have some control in place because your management or your manager told you to do so. So I have to come out with a controller, but this is actually not necessary or it's not productive. Yeah. And last but not least, are the control cost effective? Not just remember the petty cash control. Do you need a safe box that is 5 times or 10 times more than the value of the petty cash to safeguard your asset or not? Yeah. And as an internal auditor, these are their critical tasks, whether are adequate or not. Do you have efficiency and effectiveness to lower down operational costs? Because this is very important at the moment, because of the impact of the pandemic. A lot of companies is actually suffering from reduction in revenue, right? So at the same time, you would also like to lower down your cost of operation. So by having good internal control can actually help to drive down some of your variable costs up. And internal audit will also help to determine whether the policy and the procedure of the company are being followed. laws and regulations by the government or authorities are being obeyed. And internal audit can also help to detect fraud or any manipulation of records. And they can help to look at the organization with fresh pair of eyes and also look beyond financial statement. And they serve as the red flags. They can raise the red flag whenever they see any risk indicator. If they see that, hey, how come this purchasing manager keep on buying from the same company? So as internal auditor, usually we will go in and do some background check of the supplier. And then we can find that, oh, how come they are same surname one? And then the address also just next door. So that's how internal auditor can actually detect that there are some potential conflict of interest, and maybe the company in the past has been paying more as opposed to buying from a more competitive supplier from a third party, right? So this is how typically internal audit can help to reduce the cost of the operation and also detect some form of fraud indicators. Okay, now this is an interesting part where how can we help actually? We can actually help the company to address their internal control within the key business process and also governance area, from security, safety and health and environment management. And of course, we also, if the company is under construction field, we can also help to perform some form of internal audit on the construction site to see whether they are following all the rules and regulations imposed by the authorities. And of course, asset integrity and human resource management. We can look into payroll audit. Maybe in the past, the company have been paying to a dummy account for more than 6 months, or maybe a resigned staff, but the payroll executive actually changed the profile of that resigned staff. The bank account changed to his or her own account. So the company has been paying more and no one detected it until the internal auditor come in and detect it. And of course, in terms of facilities and construction and engineering, supplier change management, asset management, and as well as drilling and well. So basically, internal auditor, they can perform a lot of checking on what is the current policies that the company already established and ensure that they are in compliance. So basically, that will be my sharing for tonight. If you have any questions or comments, please feel free to leave a message. Okay, back to you, Arthur.
Okay, thank you, Ms. Poon. I think from your sharing, we have learned a lot on the importance of this internal audit, internal control assessment. I think previously, most of the company, I think maybe we have just looking into how to improve on the sales, in the marketing, but this is the area I think which in fact is very important. Okay, so thank you very much for your sharing.